Hello, my name is Nick Stewart from Exclusive Hot Properties, and today we're going to be talking about buying buy-to-let properties in the United Kingdom in the most tax-effective way possible. Thank you. So, good morning from the lockdown in the Philippines. As you know, my name is Nick Stewart from Exclusive Hot Properties. And today we're going to talk about a subject very close to my heart about, as an overseas investor, how you buy a property in another country in the most tax-effective way possible. So to give you an example, if you were to buy a property in Spain or the Philippines, you would always buy that property in your individual name. Unless you get into millions and other structures, but generally that's the goal, the rule. Some other countries you would use a company, and it really just depends. It depends what suits you best. But the most important fact is how you buy your assets, and the structure used to buy those assets can have a much more larger benefit for tax reasons than any savings the developer may give you. And that's why Exclusive Hot Properties, we're connected to the best tax advisors, accountants in the world, because for us and our clients, buying in the most tax effective way possible is what we do. So, okay, so let's talk a little bit about the UK market. Okay. So before you can decide about the most tax-effective way to buy-to-let properties in the UK, you have to understand a little bit about the tax system. So in the written blog, I will go to this in more detail so that you understand. You have to understand there are basically three types of taxes. The first tax is stamp duty. And in the blog, I've written the main stamp duty and the new stamp duty. So until the 31st of March, the stamp duty rates are very, very simple. Up to £500,000. As a company, you will pay 3% stamp duty. And if it's your first property ever in the world, you will pay 0%. So that's a considerable change to where it was before. But if you buy a property at 500,000, through a company, or it's a buy-to-let property, i.e. your second property, you would pay 15,000. Okay, then the other important thing is to bear in mind is income tax. Okay, so any rent coming from your investment property in the UK is treated as income. So as an individual, you will get you get a £12,000 as a UK citizen, £12,000 tax allowance before you start paying tax, but you can pay as the scales go up as much as 46% tax. In a UK company, you basically pay 19%. That's corporation tax at 19%. Obviously, when you take money out of the company, you're then taxed in as dividends and income. However, very importantly, is if you have a UK company, rather than in your individual name, it's the company that's the dividends that are taken out don't go into the UK tax system. They're taxed wherever you're taxed in the world. But if you're registered as an individual, then you go into the UK tax system. So that is also an important factor. Thirdly, the other major tax is capital gains tax. Again, capital gains tax for a company is 19%, and for an individual, it's between 18 and 28%. So when you add all those factors in, it's pretty easy, unless you're buying a very, very small buy-to-let. It's very, very easy to see that a UK, doing it through a UK company would be much more tax effective way of doing things. You pay less tax. Also, you control how and when the tax takes place, and there are many charges as an individual, as a company, that you can make in relation to loan interest deductions, etc., etc., that you can make through a limited company, that you can make through an individual. So generally speaking, our advice is always to buy through a UK company. There are very few exceptions, but there are some exceptions where you might want to buy in your own name. And I guess that generally applies to ex-UK citizens who are abroad, who may be thinking about returning in the near future, because when they return, they'll have to go into the UK tax bracket anyway. And then when they pull the money out of the company's dividends, it could be argued that then they'll have to pay tax on the money at the UK individual tax rates. But really, for an individual abroad, they should be doing this through a UK company. Now, the other question I get asked a lot is, isn't it expensive? So that's the other point, is obviously you have expenses with running a company. But we've teamed up with a special company, and they will incorporate a UK company for you very, very cost effectively. And they will do the accounts even more cost effectively on a yearly basis. But as part of our exclusive hot property service, for our clients, we will swallow those costs. So for the first 5 years, you will not have any of those costs yourself. We will pay those costs for you. And the reason we pay those costs is very, very simple. We pay those costs out of the commission that we make, or the fees we charge you for arranging the transaction and giving you our advice. It's a way of saying thank you to our customers. It's up to you if you use us, because at the end of the day, this video blog and the blog itself is about trying to help people. So you can choose to deal with us. Hopefully you like what you see and you'd like to work with us. But if you want to work with somebody else, that's perfectly okay. I hope you found this video interesting, and I'm looking very much forward to talking to you again in our next blog. And in the meantime, please feel free to visit the blog at exclusivehotproperties.com/blog, and hopefully you'll see more information videos that you may find useful. Thanks very much for watching.